Looking back to last week, what do you get when you have a take under of a major European bank, Credit Suisse, jitters at Europe's largest bank, Deutsche Bank, selling pressure on all the US banks, a quarter point rate hike, and not such a dovish Fed, and who knows what Yellen's saying? You know what you get? You get a 1.3% rally in the S&Ps. Go figure. No banks bankrupt today. That's good. Got Tim Quast coming on at 8:35. We're going to help him shake out the cobwebs from a long weekend. We're fired up. Michigan's in the Frozen Four. This is pre-market prep. Let's get it going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right. Good morning, traders and investors. Let's get things started out on this Monday morning. We are moving in the right direction. S&P, strong close yesterday. Triple D couldn't tell me what happened between 4 and 5 on Friday. Maybe one of you guys can. We're up 28 and a quarter handles at 40.2950. Buck down a nickel at 102.71. Bonds down a stick at 131.12. Crude back over 70, up 98 cents at 70.24. Gold getting hit down 28.70 at 19.55. Silver still in the 23 handle. That's down 15 cents at 23.19. And Bitcoin basically flat here, hanging out at the 20K level. Triple D, I got so many things that I want to tell you guys about. It's going to be one of those shows where like you hardly say a word.
Go. You gonna talk basketball off the hop?
I could. I don't want to spend a lot of time on basketball, even though San Diego State is coached by
that was cheat. That was cheat.
Former Michigan assistant Brian Dutcher, who was a 27-year assistant to Steve Fisher, who led Michigan in a national championship in '89 after Bo fired Bill Frieder. We won't talk about that too long. Gotta love FAU being in there. And I have UConn in my Sweet 16 pool. So that's all good.
I still say I got robbed. Creighton got robbed. That was not a foul. That was not a foul at the end of the game.
He had a hand on his hip.
That was not a foul at the end of the game. He jumped into the hand and made the contact on the hip. That was not a foul, Joel. We know that one, but it's okay. We'll let it go. We'll let it go.
Yeah, it was controversial. I hear.
No, really, I think was the wrong move was you don't foul within 7 seconds left because that gave them the whole game. They still could have got 2 seconds to get shot off of. That was their error there. But let's get to the action.
No. Michigan. Wait, let me finish. Michigan's in the Frozen Four in hockey, Dennis.
The Frozen Four in hockey.
Michigan program is awesome.
Yes.
So you have great, and again, U.S. hockey has come so far. I mean, it is awesome now. There's no doubt about it. It's right up there, almost on par with Canada. I'm not going to give you it to Canada, but you're almost there. So
almost there.
Almost there.
That's
almost
not too bad.
And then the final thing, because people are getting impatient. Okay, stock pitch competition on Friday. Dennis, these kids are so smart. I mean,
what'd you pitch?
I didn't pitch. It was the U of M Maize and Blue stock pitch competition.
So they were pitching. Yeah.
And I tweeted about it. And 6 students pitched stocks. 5 of them were bullish. 1 was bearish. Who do you think won?
The bear won.
Man.
The Bears
won. The Bears, man.
The Bear won. And you know what stock he did? WD-40.
WD-40.
And he was going long, WD-40?
No, he short.
Short. WD-40 doesn't move much, though.
Yeah.
WDFC for you guys out there.
He said their biggest innovation in the last 50 years is changing the straw.
I got to give it to him just for that. Not disruptive technology.
Exactly. And that also making the move over to EVs and everything, that there's going to be less demand. And also the shelf life on there. I mean, I got a can of it in the garage. It's been there, I think, since I moved in.
Yeah,
You know?
the outside of the can might break before the inside stuff goes
Exactly.
bad. So
Exactly. Okay. Rein me in here, Dennis. What are you seeing?
Oh, I'm just seeing a rally here, broad-based. Again, we're seeing this negative correlation with tech, though, and we're seeing some tech stocks actually trade in the red. You know, the higher vol ones, the ARKK, not so much, but Microsoft trying to hold green. Apple is actually in the red here. So you see a few little weaknesses. You obviously have some ratings changes here this morning. We're seeing CAT trading down because it's got a rating change. There's a few rating changes, but all in all here, it's an overall, we got a pretty good broad-based rally.
Yeah, and let's get into the banking situation here. Of
That's
course,
the catalyst. Let's talk about the
that's
catalyst this morning. Is we got some assets being bought here.
Yep. First Citizen Banks purchased around 72 billion of Silicon Valley Bank's asset at a discount of 16.5 billion. Not a bad discount there. A further 90 billion in securities and other assets will remain in the receivership for deposit by the FDIC, and this was reported by CNBC. Now we got to kind of look to see how this really shores up. And it looks like Bloomberg is reporting also that U.S. authorities are considering expanding an emergency lending program for banks. So extending them or expanding them, giving them more access to liquidity. Could this shore up the liquidity issues out there?
No, but at least it gives a vote of confidence that, you know, the private sector is potentially got some cash to try to help out. So that is the vote of confidence. You've seen FRC here this morning. Like, the biggest fear, at least for shareholders of these stocks, is that the government's going to have to come in and basically take over all these banks because nobody in the private sector wants them. So at least when you get assets getting bought, at least, you know, there is trying to be a somewhat private sector solution, not a perfect solution. Obviously, a perfect solution is they just come in and buy the whole company. So that's giving you hope here this morning. So that's why we're seeing First Republic up 22% here this morning. Pac West is trading up 8%. We're seeing some pretty good moves in the regionals here. So it's on hope. Again, so far from being out of the woods here, I still think, I look at this overall market and I still think, like, wow, what a gift, man. I just take it back to the S&P here, Joel, because it has been so resilient. And maybe this is the bulls, you know, saying, hey, we can go through a whole banking crisis and the market doesn't go down. Well, what's going to take us down then? The problem is the predictive news flow still tells me that we probably have more bank failures ahead. And this market, that prices in nothing. And again, you know, everybody will tell you, if you read textbooks, the market looks 6 months out. Those people write textbooks because they don't trade, because they make bad calls. The market does not price 6 months out. And this market doesn't price 6 minutes out. We know with that with COVID. Remember the whole COVID thing? We talked about this show relentlessly back in January of 2020 before the whole thing started. And we're like, it's coming. It's coming. And me and Joel were early, but it's coming. The market didn't look ahead at all. It's like the pandemic was spreading all over the place in China. You know, it's starting to spread, and they're like, no, we'll be fine. US will be fine. And eventually the markets collapsed. So I think we're kind of in the same boat here. I think we're going to have more bank failures coming. And that's why it's hard to be long stock. So I'm still selling into strength. I'm still sitting with the most cash since I have had since January 2020, when we were predicting the COVID crisis. I am predicting more bank failures. And if the bank failures happen, the market will go down because it doesn't price in anything.
Now, and I'm looking on the downside here, and I'm just like, Friday was the perfect scenario to bust this market. They had, you know, they should have. It felt like it. You were shaking. The old take out the pre-market low by 2 ticks trick, and then they turned around and rallied. And I was just astounded by the price action. Now we're right back up near Thursday's high, and I'm gonna go back. I got an intermediate level here. It's not really a high or a low, but it's the highest close from last week, and that's 40.3575, and you know that's discounting the crazy Powell price action. But if the bears were ever to assert control over the market, I mean, the setup was on Friday, and they did it. That doesn't mean that it can't come today or tomorrow or later in the week. But I was really surprised. And then when I was at the event, I'm watching the spoos and I'm like finishing up, I'm packing up, and then I'm like, oh, this could be a just decent close, but they're not going to get it over 4,000. And then I didn't look at my quotes. Anytime I come down Saturday morning, and we're 20 handles higher. What the heck happened between 4 and 5 on
You know
Friday?
what didn't happen? We didn't get more bank failures. This market will
it
continue to find the silver lining because right now it is saying, and banking here, I'll say it's banking. There's a pun for you. This market is banking on that there's going to be no more bank failures. I think the market is wrong.
Yeah.
I think there will be more bank failures. And I think if that happens, the market goes down substantially. So that is why I continue to have a lot of cash. Trading market neutral, because you can't argue with the technicals here. Not full on rah-rah, bear buy puts, the end of the world is coming. Again, that is also because the Fed has the recipe to fix this. They just would have to cut rates. So I don't think we're going into financial crisis part 2. But I still think there's more pain ahead. And if the market was trading, if we had the S&P trading 13 times earnings here right now, I'd be like, all right, yeah, I've got to buy some stocks here because we'll get past this. The market, to Cameron Dawson's point, who's been correct for the last year, making this point, is the market is not cheap. We're trading 19, 20 times earnings, forward earnings, which were elevated in the first place because they're all from COVID. We're still fighting inflation. We still have geopolitical risk, and we have potential bank failures. It's just not the unquantifiable risk here is incredible. And that's why I stick with a lot of cash. And you know what? People are saying, oh, you're going to miss the boat. Well, I'm getting paid 5.2% right now. I tied up a good chunk of my portfolio at 5.2%. So I'm getting paid 5.2% to wait. Maybe I'm wrong. Maybe the market's going to blast off without me. But if the market blasts off 10%, I only lose 4.8, remember. I'm not losing the full 10 now because I am still getting paid. If the market goes down 10 or even 20, which I think it could, then I'm going to pick up another 5. So I'm picking up 25 on the people. So I just don't think we have the recipe to go to new all-time highs. And if you're buying stocks, especially some of these tech stocks in here, I mean, they're approaching all-time highs. Microsoft, it's unbelievable resilience. To Joel's point, unbelievable resilience, but they're not cheap enough for me to just come in here and say, yeah, this is a great investing environment. We're going back to all-time highs.
And what if we just chop and go around and go nowhere and stay in the trading range, which the market is more prone to do than have, crazy ups and crazy downs. And Jed, you mentioned Cameron Dawson there. Remember how we did that, the Q4, or the 2023 preview in December? Well, a week from today on premarketprep.com, we're bringing back those same people. We're bringing back Todd Gordon, Cameron Dawson, Gene Munster, my man Blue. We're going to do a special 2-hour Q1 review and Q2 preview. Also, Craig Johnson is going to be joining us. So you guys set your calendar for that. We'll see what Cameron has to say about the price action. I read her note over the weekend, and she's still kind of digging in here on the bearish side. So we'll see if any of the
Why, though, again, the technicals are good.
Yeah.
And you can just put on your blinders like this. I only look at technicals. I only look at charts. I will be okay because the technicals tell me all. That didn't work in January 2020 when the market was sitting at all-time highs. You know what worked was common sense. You know what worked was reading the tea leaves. You know what worked was being short when the market was at all-time highs because eventually COVID was coming. I think there's more bank failures coming. This is not a slam dunk like COVID. It's not like I'm all in buying puts. I haven't bought any puts. I was loaded up with puts. You know that, Joel. You did it too.
Yep.
We were scared. We were early, but we were scared. And I tend to be early, but a lot of times I end up being right. So I think I'm early here too. Maybe we go for the next month. Maybe we do just continue to climb the wall of worry. But if we start to get more bank failures, don't kid yourself. The market will go down. So it all depends. So you've got to ask yourself, there's a binary answer here. Bank failures, yes. Bank failures, no. If you are in the bank failures no camp, you're buying stocks right now. I believe
that's the hard part.
We are in the bank failures yes camp, and that is why I'm not buying stocks. That's the only thing that is going to drive the price action for the next couple of months. Is there more bank failures or isn't there more bank failures? I look at FRC going from $120 to $12, and everybody's saying, we're out of the woods. It's up to 15. 120 to 12 to 15 is not out of the woods. I'm sorry. So I think I've just got to stay. Mitch, I'll let you talk. Sorry. I've just got to stay in the cautious camp. Again, trading market neutral. My trading account is market neutral. So I'm not full on. I was bearish and I was trading from the short side in 2020, and that was March 2020 was my best month in 10 years. Why? Because we predicted the whole COVID crisis. Now, again, not saying we're predicting that we don't know anything for certain here. This is not as easy to call as the COVID crisis coming. Maybe there won't be any bank failures. I personally think they are, but I'm not going as far to buy puts and short stocks because I don't know for sure. But I'm definitely investing cautiously and getting paid while I invest cautiously. 5.2%.
And of course, if we look at the Fed fund futures, right, I think this is part of that trade that a lot of people are looking at, as now July is cutting a price cut as a pivot right here in July. And I think that that's where you got to start thinking, right, Dennis?
Why?
And I think that that's why you're seeing these tech stocks also run, right? Is that you have, like you said, a very binary trade now. Either you're thinking that the bank situation is going to shore up and tech stocks are going to continue to rip higher, or we can run into some bank worries and then they get ripped to the downside. And I think that this is very hard because I agree on both sides why you could be looking at the trade, right? Technically wise, it makes sense. But then
I think it's okay to just be neutral here. I think it's okay if you want to be bullish. I won't argue with you. It's about bank failures and not bank failures. If we don't get any more bank failures, the market is going to go up from here.
Yeah,
but you also have a little
pivot.
wild card. There's two other things. Inflation is still not gone away. I know Siegel was just on CNBC saying we have beaten inflation. Sorry, Jeremy, I completely disagree that we have beaten inflation. I completely disagree with that. I don't think that is the case whatsoever. And if we start to cut rates, inflation is going to come back hard. Geopolitical risk is the other uncertainty, but me and Mitch have been talking about that for 6 months. It hasn't really materialized into anything. So it's on the backs. It's at the back seat right now. Bank failures on the front seat. So we need to get past that. We start showing me that these banks are stabilizing, looking like, we're not going to get any more failures. Then maybe you buy stocks. But if they were cheap, again, if S&P was 14 times earnings right now, I think I'd buy some stocks. They're just not cheap either. So I have all this risk, and the stocks aren't cheap, and I have alternatives. Again, people say, where do you get 5.2? It was a couple months ago. I tied up, but you can still get 4.8, 4.9. There are places to be in risk-free money. The Bitcoiners will say it's not risk-free because we're all going to fail and all your cash is worth zero. Well, I mean, they've got an argument here because the banks are failing right now. So maybe it's not risk-free, but I like to go under the insurance and let the government, and I spread it out so that I'm not over the insurance on any single bank. I spread it out amongst institutions and amongst, in investment products to know your insurance. Read the fine print on your insurance, on your guaranteed investment certificates. If you're in Ontario, I think it's 100,000. I know in the US it's different, but I think it's a $250,000 in some places. Know your FDIC insurance, but and there is a time to do that, which is right now because we are having bank failures. But I still think that the U.S. government isn't going to fail.
And I don't know if you guys caught comments from Minneapolis Fed President Neil Kashkari as he was asked during a interview from CBS Face the Nation. He stated that, of course, he was asked about, are we closer to recession? He replied that it definitely brings us closer right now. So do you guys feel that we are going towards a recession here? Because, of course, that is something else to start thinking about, right?
You know me. So I don't even have to say anything. All I do, and again, the way I approach the markets is I kind of get the overall macro picture. And yes, it does bias me, but not so much in my trading. Again, my trading I try to keep, but I bias my investment portfolio. Sometimes it does well, sometimes it underperforms, sometimes it does better. It all depends on, if I'm making those calls right. And that's what I'm trying to do for the listeners here is I'm trying to make overall market calls. I mean, I think that's why people come to the show. They want to get our overall market opinion, whether it's going to be right or wrong. Remains to be determined. But I just see so much macro risk. Why do I want to go all in on this market? Doesn't make any sense to me.
Someone asked me the question, am I still sticking with my, call that the high is in for the year? And right now I am. But
what a fabulous call too. Like, let's go and just give you some props here, Joel. It was almost the very top. You actually made that call, and I tweeted it out. We were sitting a 415 spot, and you said, I think the high for the year is in. Here we are 2 months later, and we're down significantly from there. It's so far so good. It's been a fabulous call, Joel.
Right. Okay. So there's two things that, and someone just asked me if I'm banking, you know, I don't want to let it get too close and then say, oh yeah, I changed my mind, because that would look bad. But there's two factors that are going on that the reason I'm not budging right now. Number one is April 12th, you're going to get your next CPI rating for March. Okay. And to me, the way Powell was acting and the way it's like, that's got to be a good number. I don't know if it's going to be, but if that's a good number, then that change, being lower, then that changes the complexion of things. Okay. More importantly than that, April 14th starts earnings season with JP Morgan. And I am not super optimistic about Q1 earnings season. So there's still two, and we're also trading, at a high valuation. So the neutral camp is a neutral camp and calling the high for the year. But with those factors looming, I just can't, rah say, yep, okay, yeah, we're going 4,200, 4,300, 4,400, because this earnings season, man. I mean, the market gives so many passes. Are they going to do it again? I don't. I mean, how are the bank earnings going to look? I mean, come on. And we'll get JP Morgan on April 14th.
And just to kind of iterate that we've been sideways. I think an important outlook also is just the monthly outlook of the chart, the S&P 500, right? I mean, if you look at it since November, essentially we're sideways range.
We are, and we were calling for that before the banking crisis started. I was calling for sideways. That's why I was writing covered calls and I was doing stuff. And then the banking crisis started, and I was like, wow, we haven't gone down since the banking crisis started. There's just too much more risk. So I'm like, why am I going to see a right covered calls? The information has changed. I had covered calls written on Ford. I had covered calls written on a bunch of stocks. I told you I was doing that 2 months ago or a month and a half ago. I turned around, covered the calls on all that stuff, and sold those stocks for the simple reason that information has changed. As information changes, I'm going to adjust my portfolio. The new information was bank failures. I'm like, I don't know how to price this, so I don't want to sit here writing insurance to the market. What if we do get some failures? What if credit does get tighter? I'm going to sit here and pick up 4 or 5% for the next 3 months in a couple stocks, watch them fall 20. I don't like that recipe, and not necessarily that they had to do that, but you've got to adjust for when information changes. And information has changed there. So I don't think I'm sitting here and writing covered calls right now because the risk is just too high.
All right, let's go to some smaller names. We can get out a little bit out of the bank talk. Let's go to bio and tech. They had earnings today, EPS at a $9.26. These are euros, down from 12.18 a share year over year. Sales at 4.28 billion, down from 5.53 billion a year over year. And BNTX, probably not one that I want. I've been thinking about dipping my toes in some of these healthcare names, but definitely I've been seeing that BNTX, and it just doesn't look good.
Again, we hate this stock. Sorry,
Yeah.
BNTX shareholders. I believe that there's going to be less people. I've given this rant, over the course of the last year. I believe there's going to be less people getting the COVID vaccine going forward. So there's no reason for me to own BNTX. I said I would actually like to do a Moderna. I was talking about a Moderna long, BNTX short. The stock was 140. It's 123 now. Moderna was around 150, so I'd actually 160, I think. So I'd be down slightly in Moderna, but I'd be up more in the BNTX. That is working if I had that pair trade on. The reason long Moderna, short BNTX, is Moderna's got other stuff cooking. BNTX still the one-trick pony here. People are getting less COVID vaccines. These earnings are going down. I mean, I've got, COVID is everywhere around us. Last week, Laura's uncle, Laura's aunt, Laura's cousin, Laura's brother, this is my wife, all came down with COVID. They're all sitting at home with the sniffles. So, I mean, again, COVID can be a bad outcome for certain people. So don't, say it's not. But we know the COVID virus that we're fighting now is not nearly as bad as the original one. So I think people have adjusted. They've got some immunities to it. I think it has weakened itself so that for the most people, it's not much worse than the flu now. So I just think there's going to be less people getting, you can be an opinion, you can say, oh yeah, no, COVID's going to kill us all. And when 2 years ago, we didn't know. we kind of see now that it's probably not going to kill us all. And those people who are getting vaxxed, those people who aren't getting vaxxed, it's not significantly different outcomes at this point in time. So I just think there's going to be less people getting the vax. I got all the vaxes. I'm not getting it anymore. I already said that.
And you know what? It's kind of like, what we try and do on the show here is like, identify like the catalyst and things that are going on and moving the markets. And you know what? BNTX had, it had its heyday. I mean, it had its move, and look at 2021, and there were times to participate in that, but in the middle of 2022, it changed. And ever since then, you might have had intermediate bouts of. I'm looking at the daily. I mean, it's just the story's over. I don't want to say over, but I'm just saying, there's trends and there's things, and right now, and I know I'm not going to get a lot of fans by saying this, but what about the people on the oil trade now? I mean, come on. I mean, it had that run that it did from COVID and to 2022. Also, I'm looking on the bottom right chart. I'm seeing one green candle since what? I see one green candle since it made the high in June of 22. Does that make you want to run out and buy oil? Does that make you want to run out and buy oil stocks? Look at BNTX here.
No, that makes me keep going short.
Yeah. I mean, it's just like.
But ask yourself why. I mean, why are commodities coming in? Why is oil coming down? In all likelihood,
it's
recession. Predicting, yes,
a recession.
Mitch, it's thinking, we're going into recession. So maybe in this case, and I say the market doesn't look ahead, but maybe in the commodities it is right. Maybe
commodities
it is looking ahead.
Commodities are always right.
Well, bonds are smarter than stocks. We know that, and the commodity traders probably are smarter as well. So they see, the demand. I think the demand is going to start to go down. So from where it was, we're not at peak demand anymore. And if we do go into a recession, and the other thing to consider is that a lot of oil companies, which we've talked about, just move away from USO for a second, just move into the individual stocks, which have not done well at all. I have some Oxy. I'm actually at the same spot with it. It's held up unbelievably considering where the XLE has gone in the same time frame. But that's Warren
Buffett. Should have kept fighting Warren, man.
And it's working. I mean, so right now OXY is the same place it was a month ago because of Warren Buffett, February. And if you look back to February, XLE is down, which is taking the lows, 83 to 77. So we're down about 7% in the XLE. In the same time frame, OXY is 0. So again, I keep putting on that on every single night. I'm short XLE against long OXY. And it's continuing to work. I did it again. Again, some days it doesn't work every day, but overall, some days it's been working fairly well. That there's just tracking and it's holding up better. But that's a pair trade, and that's something else to talk about. The overall trend that you're identifying in oil here, Joel, is down. I think the overall trends in commodities is down. And yes, this is maybe to Siegel's point is we're beating inflation because commodity prices are coming down. Services are not, though, and you got to remember one thing about the U.S. is the service economy is so huge in the U.S. and the world here now. I mean, services are just such a bigger piece of the economy than they were 25 years ago. So if service inflation is still sticky, which it is because of wages don't like to go down, they like to continue to go up, then you still haven't beaten inflation. But I think the oil prices and the commodity prices coming down are telling you something more sinister here that's happening here.
All right. I did want to point something out that at least I know this is off of the oil topic, but those healthcare names did really start getting moving as on Friday. I just want to point out, of course, this is definitely running with that SNY move. Sanofi with their kind of drug, and you've seen Regeneron really start taking off. So I'd keep an eye on certain names, Regeneron, SNY. I started seeing also other drug manufacturers, the major ones, starting to get going. AZN has been starting to move as of late. I'm keeping an eye on like AbbVie. That made a nice little move above the resistance around the 156 area. So I'm just calling these out because these have been really hit hard at the beginning part of the year, and I'm starting to see them catch a little bit of strength. So I'm keeping an eye on names like that. And another one that I'd mention is like VRTX. Look at that move in the last 2 days. That's a pretty strong move there for biotech.
Defense.
So just want to put this out there, right? The similar style trade, just keep an eye on it to see if there's some more rotation that follows through today.
Mitch, it's such a good point you're making here, and what you're seeing is this market playing defense here too. This market is starting to move defensive. And again, with interest rates coming down, long-term rates have come down. you start to see these things show a little bit more life, and people are like, oh, I missed the 5. Well, now they're looking at other opportunities to pick up yield. Johnson & Johnson's the sleepy one here. I actually think J&J could, it's been hit so hard.
Look at that.
Where's the PE on J&J? Has it got down? It was always traded with a premium. This is a company here that I actually kind of like. Where is it?
22.
Still?
I know it was 27.
Might not be as updated as some. Like,
I think you could be right, Mitch, because it was trading 26, 27. And I was like, I can't bring myself. I'd love it down more. I'd love it under 20. Get J&J down to a market multiple, and I'm interested for sure. So just in my opinion. I've got forward P on J&J of 15. I don't know if that's correct. 22 is the current. I got to do a little bit more research here. But J&J is down $30. J&J is where it was 3 years ago. You have the talcum powder stuff here. Maybe that's a wild card. It would suck for them to get sued. And then all of a sudden, it would suck if they had to actually pay out some significant money for them for that. So that's still a wild card here. But as J&J comes in, 140s, 150s. I mean, at a certain point in time, it's a buy.
Look at this triple M, Dennis. I know this is like a wild tangent, but man, that thing hasn't got a bid at all.
Stay away.
No,
I don't know how you hold
and that's what scares me a little bit on J&J with these lawsuits, and Triple M has been weighed by these lawsuits. It's 5.88% dividend here now. We know the lawsuits are the whole reason the stock's been cut down from $260 in 2018 to $100. They need to get past this. They need to get past all that stuff. Some people are saying they are getting past it, but I think it's still unknown, unquantifiable risk there from all these lawsuits. So that's a wild card here. That's what weighs on 3M. If it gets past it, if we can get like clarity on what that cost is going to be, maybe 3M's a buy.
All right, let's keep going.
But again, I don't have clarity there, so I'm staying away for now.
Let's go to Bard's downgrade on Caterpillar to underperform and lowering the price target to 185. We started seeing a little bit of the crack on like XLI and the industrials. Is this going to follow through, or will we catch a bid in these industrial stocks? Farming, heavy, and construction machinery here with Cat. Is a cat out the hat?
I've been bearish the stock since 240. It ran to 260, and I was like, I don't get it. Everybody was telling me that, oh no, I forget what they were saying. Remember,
it was a good run. It was a good run.
And I was wrong for a while.
Wrong,
again early on that one. I kept trying to be bearish the stock again early. Now it's starting to work, that trade. Deere as well. I've hated Deere since 440. I almost got the top on the show talking about that one. It's 386 here now. I get that the low Ps are there, but I just think if we're going into tougher times, big machinery,
for me,
machinery are going to be less.
I'll just make quick. I mean, it's hard. I'm not going to do any levels on this because it's just I look at that run. I mean, where am I going to call support here? Is it going to fill the gap at 200? It's going to zig. It's going to zag. I mean, but I agree. Just too hard for me to call support. I know we got Tim coming up in 1 second, but I just want to show something here, and we talk about it all the time, right? About the S&P and the components. Well, our good buddy, where did I put it here? Our good buddy here, I'm going to put it right here. Good buddy, Todd Gordon, who we battled on the Bank of America. He did this over the weekend, Dennis. The top 10 S&P companies from 1986.
Well, that's fun.
Look at that.
Roll that up.
Yeah.
This is a big thing against buy and hold here. At least the indexes take out the trash and they bring in the good
world
companies.
Used to be run by oil. Let's just be honest.
Oh my gosh. Look at these top companies. IBM was number 1 from 1986.
And you guys still want to buy Intel. And you guys still want to buy Intel.
And GE, and everybody will tell you, I'd like to see the GE chart if you can bring that up long term. Because
GE's coming back.
Look how great
I know you guys hate GE, but
we could say recency bias here is GE has been really good in the last 6 months.
Okay.
Yeah,
GE has been the absolute dog of all dogs in the last decade or 20 years. Look at GE since Welch is gone. I mean, GE is down so much over the last 20 years. Think about where the market has went. Joel's going to grab GE chart if he can, or at least go as
I
far
am.
back
I got
as
it.
he can.
I got it. I just had to switch off the screen.
And then again, the reverse split, will mess you up because this stock is significantly off the highs. He's bringing it up.
Yeah, I think.
So you think GE's like, oh, what a great stock this has been. This has been an absolute dog. It's had a good 6 months, but this has been an absolute dog compared to like Honeywell and other stocks that are similar.
Perspective though, from when I've been
Where is
trading,
it?
it's
Do you have
kind
the
of
chart?
break
I
even.
don't see the chart.
I can bring it up right here.
No,
there it is.
Share it.
Yeah,
there it is. Look at that.
Yeah. Well, that's not even. It's even worse than that, Joel. If you go farther back, so it's $240 back in 2012.
I can go back here.
But if you go farther back, I think to 2000, I think it's even worse.
Baby.
It's even
Let's
worse.
go back to the 300s.
Look at this. $363 back in 2000. Here you are 23 years later losing 75% of your money.
That's a good line. Whoa.
A bad investment.
I'm going long if it busts above there, man, for sure.
I'll tell you what, though, at least from my perspective, right, since like kind of 2018, since I started really kind of getting dirty into trading, I mean, it's kind of break even. For you guys, it's kind of like I won't even go near this stock. But
even
me,
break even sucks from where you were.
I mean, relative. I mean, that's not the worst stock. Like the way that you guys view it. You guys, I know a lot of traders out there. They won't even look at GE.
I trade it all the time. I'll trade it, but it isn't going to my long-term portfolio. I'll tell you.
Yeah,
that.
you see that's the kind of conversation I get with a lot of long-term traders. They're like, no, I'm not even touching.
I trade it, but we're not buying investing in GE.
I wonder what Tim has to say about that, but we'll find out. Of course, you guys know what time it is. Smash the like button. It's everybody's favorite Monday time, Market Structure Mondays. Let's get to it here. Tim Quast. What's going on, Tim? How we doing?
Let me just ask, what if God was one of us?
Sorry, that's a great song.
It's just it's
a great song.
It's a wholly non-contextual.
You know it.
Wholly well, maybe. I mean, there are a lot of folks probably who listen to this program who have no idea what I just blurted out. But as I told Joel, we saw Joan Osborne here in Steamboat last night with some friends. And so that takes you back to the 80s, doesn't it? I think. Speaking of GE,
80s were awesome, though, Tim. I could relive the 80s. Couldn't you relive the 80s? The 80s were fun. Joel would relive the 80s for sure.
Back when everything was awesome. The 80s.
Yeah.
I love the 80s.
The lovely elevator music, we rocked back then.
Good to see you. Happy Monday, guys. Happy Market Structure Monday.
Happy Monday. Let's.
You didn't have the internet back then, Tim. Got to get rid of the internet
or social media.
Yeah.
So
the world was a better place without social media, though, wasn't it?
Well, it was. I was in Sri Lanka, off the coast of India, in college in 1989, and I communicated with airmail. We would pack. It's like tissue paper. And we would set up our dot matrix printers to pack text in those things and send letters to our friends and family. And that was social media in 1989. And it was awesome.
Well, Tim, you know what they say, right? Do you remember?
Great song.
The good times, baby.
It puts you in a good mood, right?
I always try to turn things around. I mean,
it's not. I don't even understand the music nowadays. Tim. Like I put it on, Laura's like, "Oh, listen to this new song." I don't even understand it.
Right?
80s and 90s and 70s, 80s and 90s. Those are the best. That's the best eras.
Oh boy,
70s, 80s.
We're going off the rails here. Okay.
All right. Well, I'll tell you what. There's a lot of negative out there, so maybe you guys remember a little bit more of the bullish tune out there. But let's talk about, of course, the economy, the banks here, real estate. What stocks are rising? Market structure edge. Help us out.
Well, there's a lot of negativity, right? Which is a good reason to go back to the 80s and play. Right.
Let's
celebrate good times.
Going.
Right, if you read Mike Wilson's note from not that you have to do this at all. Morgan Stanley's chief equity strategist, I think he is.
Yeah,
he's one of many who see pretty vicious conditions here. he said he sees a vicious end to the bear market. So I guess you could take that as good and bad. I don't know. I can certainly give you my. I think I have a good handle on the basics of economics because they underpin EDGE, supply and demand. I think I have a good handle on monetary policy, but that's not necessarily how to think about it if you're a trader. If you're a trader, what I think you have to focus on is where the money is going. And if you looked at how the market's been. Okay. I mean, the broad measures were up, about 1% last week?
Yep, 1.3.
Right?
Bank crisis. We ain't going down.
Right. So
bank crisis is on pause right now.
So why does that occur? That's your central question, Mitch. And so, look, I can only tell you what we see in the math. And the reason prices rise is because there's been diverging supply and demand. And I can explain why that occurs. And certainly, as we come to the end of the quarter, the big thing this week will be the end of the first quarter. What is that? That's Friday, right? Friday will be the last trading day of the quarter, the last trading day of the month. And we can talk about that in a moment. But this is so I have GE up, by the way. So to me, if you're going to trade GE, trades diverging supply and demand. If demand rises and supply does not keep pace, there's an opportunity. If they converge, leave. Just take your gains. And it really doesn't matter what GE has delivered over the long term. If you take the periods of time when it offers you returns and avoid the times when it doesn't. And I think that the same is true in the market. Do I like that? No, I don't. I mean, I think it would be much better for all of us if the market were a good barometer of economic conditions, but it's not. You cannot look at the market and draw a big conclusion about what the economy is going to do. And here's why. It's because much of the money in the market needs equities as an asset allocation plan. So all the people in their 30s and 40s who have target date funds and 65% of their assets have to go to equities, that money has to get deployed. And the managers doing that aren't sitting around going, well, I wonder if earnings are going to decline. That's not what they think about. A small part of the market comprising about 9% of trading volume is doing that. And you can hear Jim Cramer on CNBC, no offense to Jim. Like, well, we just focus on companies with great fundamentals, we'll be fine. It's not true.
Yeah.
It's not true unless those companies offer enough product to absorb the part of the money that is allocated to equities. It's the reason why Microsoft and Apple are 13% of the S&P 500. It's because they're very large. So here's why stocks have been rising. Just take communication services. So this is where Meta is. Pinterest, stocks like that. Demand rose and supply fell. It is that simple. So as we came through options expirations, these things had been devalued. And so the people allocating assets looked at them and said, well, there's some pretty good supply of the product there. And they consumed the product. Well, the good news is we can see that. And I'll tell you, it's a lot less work than wading through fundamentals and hoping that earnings or margins or top line growth are going to correlate with how stocks perform. Good luck with that. That's gambling to me. To me, what is not gambling is following supply and demand. And if money goes into equities, then you can. If money leaves equities, you should. And you can see that stuff. And it's that simple.
Yeah, and we're also getting really close to quarter end here, right?
Yes.
How will that be affecting some of this data and where we could see some trades going?
Well, it's very important, traders, to understand that if you're managing index funds and realize that the largest single asset class in the world in equities is what's called passive large cap blend. It's neither growth nor value, but both. Microsoft and Apple are both value and growth, believe it or not. This, in the past roughly 2 weeks, Microsoft has been the growth choice. Apple has been the value choice. And you can see it in the data, by the way. But that is where the money's going to go. And at the end of the quarter, all that money has to be squared with the index. So if you have to be a certain part value, a certain part growth, it's got to get there by March 31st, roughly. Because if you don't, you could get in trouble with regulators. So as we come to the end of the quarter, you want to know, does that mean people are buying equities or selling them? Well, if we look at, this is Benzinga March 27th, today, and it's got 5 components and their value and growth. So if I blend these things and look at the stuff that is telling us where money is going, interestingly, it's got the lead category, lead sector is consumer staples. I'll zoom that in so you can see it. Now, I've only got 5 stocks in here, so it's not a great representation. But look at this, rising demand, falling supply, and it's a blend. Passive money is the lead behavior, just exactly what I'm talking about. All these asset allocators, where are they putting their money? Well, that's what we want to know, so that we can take advantage of where that money goes. It's the best way to produce returns short-term when you're trading, because it is the most reliable, the best central tendency, the highest probability, whatever your aphorism is that you prefer. That's how to look at this. So if I looked at these things right now, I mean, it's kind of telling. I think drinking Dr. Pepper is a pretty good idea, because KDP is a great value play, as is Monster Beverage. I don't even know how you pronounce this. Aglion. It's a healthcare play, but it's a great supply-demand divergence. Gold, which is bearic, that's it. That shows how money is hedged. Nvidia, there's your little growth piece of the puzzle. It's taken the place of a lot of other things, but stuff like that.
These are all playing defense.
Well. They are all playing defense. I agree with you.
And Nvidia, they'll argue with me, it's 40 times earnings. This is not defense. But again, we know, we can see the correlations. It's not a bank stock. And they have flocked to Nvidia during this time saying, hey, we've still got chips and everything. Nvidia is still the leader here. Very little debt, if any. I'm not sure last time I looked. I mean, they just think that Nvidia is fine even if we lose the bank. So it is playing defense against the banks. But gold, obviously, defense. Monster Beverage is defensive. Drinking Dr. Pepper is defensive. People drink more Dr. Pepper when they're not feeling good about their portfolios. It's all defense, Tim.
I agree with you. And I remember, Dennis, that you said, I think it was Monday, that if you're going to be someplace, be in large cap tech. That's where the money's going to be. And you were right about that. And in some ways, Nvidia has become a touchstone for that. And we can look at big tech, but here, here's why money's going to Nvidia. And it's right in front of our eyes on the screen. And it's got nothing to do with its fundamentals. It has to do with its liquidity. So if you look at the dollars per trade, which is a great measure of liquidity, for algorithms, an algorithm that is programmed to move a lot of money in many different things at once, what I want to do is how much of that can I move? And if you look at all of these, $23,000 a trade in Nvidia versus $5,000 in gold. And these are all liquid stocks, by the way. All of these are in the top 500, close to it. Yeah, AGL is about the top 850 in the market for liquidity. They're all very liquid stocks. So big money can get into and out of them. Very difficult to get in and out of the Russell 2000. By the way, here's something to know, traders. There are roughly, if you look at the Wilshire 5000, one of the largest total market indices, there are roughly 1,700 microcaps and 1,300 small caps, and they're 5% of market cap combined. 3,000 stocks are 5% of market cap, which is why they may get arbitraged back to an index level at some point, but they're not good places to be. There are only 500 large cap stocks and 300 mid caps. That stuff comprises almost 90% of all market cap. Maybe it's even more than that, 95%. So realize that's where the BlackRocks, Vanguards, and State Streets of the world are going to go, and Fidelity. So that's really how to think about the market today. Not about, well, what kind of cash flows is somebody producing? It's what kind of size does this block represent, and how does money go into and out of them? And that, the good news is very measurable, traders.
All right, I'm on mute there.
Oh, sorry about that.
Joel's on mute. Go.
No, I'm not on mute. End of quarter, Tim.
Yep. So, money's been going to big tech. By the way, you can look at that very easily. So we at Edge, we put this portfolio called Big Tech on your on your desktop, and their passive money has been a key driver. I would look at that and say, well, it's about done. It's about to hit 10, and supply is starting to rise. So the movement into whatever's going to get allocated to big tech, except NVIDIA is still the best of that lot, is about done. I think, would you look at it and say, where's money going to go to value or growth? Dennis already summed it up. All the money really is pretty defensive. And that's a pretty good place to be. So if you want to know, you don't even have to read all the pundits and the commentary. All you have to do is look at the money. Is the money biased toward things that are more aggressive, or is it biased towards things that are not, that are very liquid? And we have our answer. So I would say it will be a value market. Now, if I look at the data, we track momentum and low volatility. I trade those. I'm going to trade stuff in those. And so momentum's got 8 components. That's not great. If you're not double digits, it's not great. So it's not a great momentum market, but you can see where the momentum is. Fast traders, which are the momentum force, are in communication services. That's where it is. And where's low volatility? Passive money, asset allocators are in consumer staples. So if you want to be low volatility, this is interesting, by the way. All 4 of these stocks have exactly the same volatility. That's telling. It's all 1.7, 1.7, 1.7, 1.7. That's all they move intraday. So if if one of these stocks, like Dr. Pepper, is down 2%, I'm buying it because I have a very good chance of making 1.7%. But that's where the money is. So if you want to be safe, be there. And if you want to take chances, and I always say take gains, not chances, trade communication services. That's where the momentum will be for a little bit longer into quarter end.
All right. Like always, you guys can check out Market Structure Edge, throwing up the link here so you guys can check out this platform yourself. You want to get access to the data? Check it out, team. There's the link. And like always, you guys can reach out to Tim to get a little bit more. We'll have you back on, Tim. Appreciate you coming on.
Thank you.
Enjoy the weather out there. I see a lovely white snow all over the mountains. So
we've had 2 feet of snow in the last roughly 3 days. We're
tears,
well over
tears, Tim. I'm missing Colorado. That's for sure. You have a good one, my friend. Take care.
You too. Thank you. See you guys.
All right, let's take a look into the market as we wrap up and then get to our TradeZero segment today. Yeah. What you got, Joel?
We're just quiet here. I mean, the big move was overnight. 33.75 is your pre-market high. I mean, I'm looking at this 15-minute chart here, and nothing. 5-6 point range since we started. What I think happens is I think all the traders listen to pre-market prep, and they set their they do their strategies and everything, and then they see what we have to say, and then they pick it up. And
did CCL ever decide to pull out earnings? No, they still haven't decided.
They always come after the show. It's always like we wait. We do this every quarter.
Every
CCL
time.
CCL, and then 901 they come
I'm
out.
trying to keep an eye on it, team, for us, but it seems like they love to wait for that 9 o'clock time. So
we got a few others. We're, like we said, we never seem to be fully out of earnings season here because that's just as it stops and it starts again. But we got Lululemon on Tuesday. We got Micron on Tuesday. We have Walgreens on Tuesday. We have Restoration Hardware on Wednesday. PVH tonight, so nothing crazy, but Lulu's probably the highlight here, I would think. Maybe, Joel, I can just do a technical on Lulu going into Tuesday's earnings.
We actually just talked about Lululemon on our book club, and we talked about that specific daily candle that you see there on the top right. Let's test Joel today. What is that daily candle? I'm testing Joel.
Right here?
On the right hand, right there. What does that show up there?
Shoot,
Let's test the chat. What do you guys think?
Is that like a something bullish? Is that like
that's a bullish engulfing candle.
Oh, the old bullish engulfing candle trick.
You know what? You guys can learn Japanese candlestick charting techniques, baby. Come to the book club. We're running through this right now.
You know what? It's funny because I put the candlesticks on here because they're pretty, and they look better. But like, I'm really a bar chart guy. I like
bar chart type of guy. You're on those Western technicals, not on the Eastern.
Joel's
technicals.
A creature of habit. He's gonna do what worked for him for the last 40 years. So he's a creature of habit.
You know what?
I am too, though.
You know what though? You got to look out for is it Ichu Mickey Cloud.
Oh, yeah. I see you.
Is that a baseball player?
Dennis. All right.
Dennis cracked a joke.
Dennis cracked the joke. Joke, not funny. Don't start rumors, Dennis.
I know.
All right, let's
bring us back here.
What do you see on Lulu, Joel? And then we'll go to our
I mean,
TradeZero
it's hard because you're doing the pre-earnings run, so I wouldn't, I'd let it go on the upside. I would say I would keep a level out at the double top here. Let's call it 317 if you're looking for. Wow, it's right there right now. So 317, see how it reacts there. Kind of thin on the upside. Obviously, if they whoop it, if it has bad earnings or whatever,
Whoop.
I don't think you're going to get to 290. But what I would look for, let's say you make a higher high today. Let's say you go to 320 today, just for an example. Then you get the old 30-point move. If it came back, if they hit it on this, I would look at like 300, 305, because there's a lot of people like, are we not going into a major recession? Do I want to own Lululemon? So I think they would buy it on the dip. But those are, once the numbers are out, everything changes. S&Ps, just when I said they weren't moving a little bit, they got a tad
Starting to leak a bit.
Yeah, nothing.
We've been wild overnight, though. Let's go to the TradeZero segment. Let's see what's up. Let's see what's down. Let's look under the hood.
All right, let's get to it, team. Smash the like. Let's go.
Oh, wait.
All right. Any last comments, Joel, before we get you?
Yeah, just before I go, did you see Elon Musk's tweet that Twitter's worth half of what he paid for it, Dennis?
Well, he knew that going into it. That's why he was trying to get out of it. He's like, I'm paying too much for this. So he knew that already.
Unfortunately, there's no takebacks.
He knew that. He was trying to get out of the deal for that reason.
He said, "Can I just take back? I just want to give it back to you guys. You guys can handle it." Well,
go.
Honestly, Twitter is gonna disappear. Maybe we won't know. But let's get to the net change up. Of course,
banks.
What do you see? The regional banks, of course. That's what we're seeing out there. FRC now up there in the pre-market to 1680s. Can we take that out here towards the open? We're pretty close towards it. I think this is going to be all kind of determining more liquidity, right? Will these banks be able to make it through? I still think it's too high of a risk to go after it, but hey, to each his own. If you guys like these, any comments on FRC, Dennis?
Well, Joel sold it, took a loss. I sold my pack W. I mean, it's just the risk reward here is just the unknown. Like I've said, I think this might eventually get taken over by FDIC or worse. So that's why it's just too much risk here. I hope they survive. I think it's an excellent bank. I think if it does survive, it's a great deal at $16, but it's a big F right now.
Trading up near the highs of the pre-market session at 1680s, the pre-market high. Obviously, positive catalyst today with the assets being bought of that other company. So you got a positive catalyst instead of a negative catalyst.
All right. And of course, there's some other banks showing up here. Wall, you see that high there, 35.56. Will it get through that level and continue pushing?
All regionals.
Just going to be all about regional banks here. You can see a bunch of them, right? And then you also see here FAS, which is kind of the bull 3 times leverage for you day traders out there. Be careful with this one, of course, but this one definitely moving in the pre-market here. We'll look to see if it gets through 54.49 pre-market high. Let's go to Tesla here showing up now, getting a nice little push here. Don't know if this is news related. I'll take a look there. To see
I think it's just, and Tesla's beta's higher, and Tesla has not gotten that same defensive trade. It's kind of still been moving with the overall market. So moving with the SP, we know like a Microsoft and Apple have been like flight to quality, and them kind of moving opposite to the market, like not the S&Ps, but opposite the IWM. Tesla has not done that. So I think maybe, just because it's, a higher beta, obviously higher, valuation company here, it has not been classified as that safety trade that Microsoft and Apple were. So it kind of is moving with the overall market. So just keep that in mind. If you're trading Tesla, it's not moving with the Microsofts and Apples right now. You
got to establish, I'm just going to go like broad here. And, you've had the nice run. It had the pullback. It's trying. But until, I would not look for another major leg higher here until you cross 200, get above that psychological 200, establish a bid at 200, not just poking your head. So going a little bit longer term on that one. But guys, I'm going to let you finish up today. Another fun show, and back with you later on.
Thanks, Joel. Let's see what's down here, Mitch.
Let's see it. Let's go to it now. We're going on what's down here.
We talked BNTX already.
Yeah, there's this UBX, but I have
company.
no idea. Put it that way. Big
Unity
knife there.
Biotechnology, probably some bad trial or something.
Bad trials, right? Yeah, we'll be careful with that.
Story here, so I just made that up.
This is GDXU. I don't know. I haven't traded this one.
I trade
this is
GDXU.
3-time leverage.
It's triple the gold miners, so it's triple the GDX. So
gold, big pullback there. You can also see it with JNUG showing up here. So gold on the pullback.
And we know gold is moving opposite to the regionals. If you think we're going to have more bank failures, gold's probably a buy on this pullback if you think we're having more bank failures.
Yeah, we'll see if it's an opportunity today. I do see Ollie showing up here. And I think this one just recently had earnings. It was an earnings pop, right? And so I do see that pulling back here. Let me just take a quick little peek.
Citigroup downgrading it to sell, lowering the price to 49. So again, analyst ratings have not had as much influence as they have, but when they put a sell on something, the market takes note. They don't like seeing that sell because it's more rare for analysts to put sells on stuff. So when the analyst says sell, the market really pays attention to it.
This is that hourly. We'll look to see if it closes kind of the daily gap, right? Daily gap between kind of this 54.16. I'll look to see if we close that gap on Ollie's bargain outlet. Let me see if there's anything else we can talk about here. Moderna showing up there on the pullback. That's definitely one that will be a little bit on watch. We talked about how some of these biotechs were getting a little bit of a lift, and we'll see. Can it kind of push higher? What do you think about Moderna's chart?
Again, I like Moderna relative to BNTX. So I'm scared of all the vaccine makers because those earnings are coming down. People are going to get less COVID vaccines in the future. But I think Moderna has more. They have more. Obviously, they're working on other products here. They're working on other drugs. They're just doing more here. So I like the relative trade of short BNTX, long Moderna. But again, I don't have it on. But I still like that. So if I was trading Moderna from the long side, I think I would short BNTX against it.
All right. Like always, you guys can check out some extensive inventory of short locates. Choose TradeZero for that and check them out, team. I'll go ahead and I'll throw it up here so that you guys can also get access to this TradeZero flagship software. We're going to start wrapping up here. Like always, you guys smash the like if you guys enjoy all the action we do here. TradeZero is a partnership of Benzinga. Let's get back to the action. Last comments for the day. Dennis, what do you think?
Chop. I'm not chasing anything. Yeah. And you're going to have people come in. Okay. Yeah. First Citizens going to buy some of Silicon Valley Bank. Here's what we needed. This is the green light to go bullish. I think you're going to see it not that easy. I don't think we're going straight up. I don't think we're going straight down. I still think we're going to equal a lot of chop. What I was tweeting on the weekend, I think we're going to see a lot of chop until the next bank failure. If we don't have another bank failure, then we could continue to chop our way higher. If we have another bank failure, we're going to chop, and then tank. Yeah. So I think we continue to chop. How I trade chop is fading moves, selling rips, buying dips. It's worked for the last year. Why does it stop working today?
I agree with you, Dennis. And if anything, I've also been looking at the same kind of trade, but different, right? The downside action on that, like maybe shorting something, getting a swing low, but then selling it into that and almost expecting that bounce, because that's how it's been also on the downside and the upside, right? Sell the rips, buy the dips has been working. We'll see if it continues to work here. Have a good one. Like always, you guys keep up with everything Dennis Dick does. Triple D Trader. We'll have you back on tomorrow, Dennis. Have a great one. All right, team. We're going to start wrapping up. Bring you guys over to live trading. That's coming up next. You don't got to go anywhere. If you guys want to keep up with some trading action, Zunaid, Lord Ryan, and I will be getting into the trading action. I do have some swing trades on. So if you want to come and find out a little bit more also about swing trading, and later today, 3 p.m. to 4 p.m. start swing trading, right? Our latest show, it keeps growing. We do have a lot of people tuning in now for Start Swing Trading. If you guys want to talk about some swing trading ideas, we'll have Option Mike today. And he actually swing trades even options. So if you guys want to check that out, that's going to be later today, 3 p.m. Eastern. The show starts. Option Mike joining us at 3:30 p.m. Eastern. So don't miss that. And you guys heard me yesterday or this earlier today mention about Japanese candlestick charting techniques. We had a really fun game on, of course, Sunday. We were playing, of course, Name That Pattern as we were looking at real life examples. patterns right now. That's why I knew the Lululemon pattern. We were taking a look at daily charts and showing what type of patterns were out there. Reversal patterns are what we just got in. You guys don't miss it. Join the book club if you guys want to extend your learning. And especially if you're a newer trader, I would definitely check out the book club. It's all about continuing to grow your financial journey and truly give you guys value back. That's why I created the book club. I do this on Sundays. I can very simply just relax and watch TV, but I want to build, and I want to build with you guys out there. So join the book club. Throw it up in the chat right now. You have to hit that form to join the book club. It's an exclusive membership club. So if you don't hit the form, you can't get in. So if you want to get in, hit that link, and I'll see you guys on live trading. That's starting up now. Let's get to the action. It's time to roll up the sleeves and get to this market. It's going to be a tough one. It's not simple, but that doesn't mean you can't go get after it. I'll see you guys there.